Banks are one of the engines of the modern economy, but the way they work is under threat. Tech payment giants and digital currencies are revolutionizing how people use money, and this could have dramatic consequences far beyond banking. It could affect consumer privacy, government power, and the stability of the entire financial system. It is difficult to overstate sort of how radically different that world could be from the one that we live in now. So what would a world without banks look like, and would you even miss them? The fundamental principles of banking have been the same for centuries and revolve around the greatest magic trick of all. How to create money. It's called fractional reserve banking, and here is how it started. Hundreds of years ago, banks stored gold for investors, but they realized it was unlikely everyone would claim the gold back at the same time, so they began to loan some of these gold deposits out to other people. This made money for the bank through interest and helped power the economy, by allowing idle deposits to fuel new business and trade. As time went on, the banks started issuing banknotes, or IOUs, rather than physically giving out gold, and these IOUs started being traded in the economy. This meant the amount of money in circulation was much larger than the value of the gold held by the banks. So the banks' lending had in effect created new money. Nowadays, most money is digital. When the bank makes a loan, it creates a new asset on its balance sheet and credits the borrower's account with fresh funds, which creates a new deposit. The fundamental principle is the same. Every time the bank makes a new loan, it creates new money. 90% of money in the world is digital deposits that have been created by banks in this way. This is hugely important for the economy. It means that banks can respond to demands for money in an economy, and that means that the supply of money in the economy is very elastic. There is no set amount of money in circulation, so if the economy is booming and more goods are being created, then thanks to fractional reserve banking, the supply of money should also increase, as people take out loans and make new investments. The ease with which commercial banks can create money is primarily controlled by central banks, like the Federal Reserve, which sets interest rates. If interest rates are high, banks pass those costs on to borrowers. This makes it more expensive for them to borrow money to buy things, so banks create less new money. Central banks also supply cash for use in the economy. They print the physical paper cash people carry around, and so banks and central banks balance the need to create money between them. That sort of balance means that money can grow quickly with demand, but also that the central bank has a direct presence in payments and transactions. But this delicate balance is under threat, thanks to a revolution in the way people use money. For a start, an increasing number of businesses no longer rely on banks for loans. This is because businesses, historically, used to create tangible assets, like machinery, against which banks were happy to lend. They could always claim the assets, if the borrower stopped repaying. Intangible assets like software can't be easily posted as security for a bank loan. The world has shifted in a way that makes it hard for banks to fund the most innovative parts of the economy. If you want to get funding as a Silicon Valley startup, you need to go to people who are equity investors, so they take a slice of your business in return for funding. It's not the only startup, but non-bank loans and securities have risen sharply. This means the role banks play in financing important businesses is receding. The way people move and spend their money is changing too, thanks to a new class of super apps from China. One of the most popular is Alipay, from Chinese tech giant Ant Group. It has over 1 billion users and handled $16 TRN in payments in 2019. Rather than using bank cards to make payments, Alipay customers carry out transactions by loading money into digital wallets. They can then do anything from buying lunch to investing in stocks and shares, all without leaving the app. Rather than paying expensive international transaction fees to their bank, Alipay users can also use the app overseas. This sort of new digital payments ecosystem completely disregards nation-states and national borders. It's not just Alipay, Facebook is developing its digital currency, and Amazon is also working on financial services. Some worry this could concentrate too much power in the hands of a few tech companies. But, for central bankers, the problem is even more acute. They fear these developments could cut the cord between the central bank and the economy altogether. These super apps started just making payments, and now they provide loans, to investment services, insurance, all the things that banks do. Central bankers feel their ability to oversee, and conduct monetary policy, and oversight is, fundamentally slipping away. Some central banks have taken radical action, by creating their own digital currencies, to rival the tech giants' payment systems, in the hope, this will secure the grasp on the economy. Central bankers' level of discomfort, is potentially prompting them, to, act to change this, economic system, the monetary system that has underpinned modern economies for 250 years. China is one of the largest economies leading the way, by trialing a digital yuan. We have an entire episode on ECNY yuan, we put a card at the top right. You might have heard of Bitcoin, or other digital money, that is supposed to bring innovative game changer, but digital currency issued by governments, in this way might be even more radical. Here's how it works. Commercial banks hold most central bank money, as reserves against customer deposits. You can only access a small amount of this government-made money, via physical notes and coins, as this physical cash is issued by the central bank. In the UK, banknotes are even signed, by the chief cashier of the Bank of England. A central bank digital currency, or CBDC, is like digital cash, as it gives the consumer a direct relationship with the central bank. So, in theory, instead of keeping your money in a commercial bank, you could hold all your cash in the Federal Reserve or the Bank of England. CBDCs are only being used or trialed in a handful of countries worldwide. Still, the growing fast 80% of central banks are considering issuing them in the future, even here, our Bank Negara Malaysia. The Bank for International Settlements, which is a club of central bankers, says that within 3 years, a fifth of the world will live in countries that have this central bank digital money. This could change everything. If everyone put their money into a CBDC, then fractional reserve banks could be out of a job. This could affect economic growth, as they could not rely on consumer deposits to finance their loans. This would be particularly pronounced in the developing world, where most lending comes from banks, but that's just the beginning. There are also concerns about potentially, cyber warfare, because if you can take down the servers that support the central bank digital wallet system, then you could shut down an entire economy. Digital currencies could also increase the potential for state intervention in everyday transactions. It becomes much easier for governments to block your ability to pay for something ultimately. It's straightforward to imagine that, perhaps you could program, money, so that it can't be used to pay for illicit activities deemed by the government. Supporters of CBDCs claim they could lead to a world where more people have access to financial services, and it's cheaper and easier to move money across borders, but innovations like this could also disrupt the financial equilibrium, and give governments far greater control over their citizens' money and lives. So, although it's possible for the first time in modern history to imagine a world without banks, you might find you'd miss them if they were gone. This is where decentralized cryptocurrencies like Bitcoin and Ethereum shines, as no party or government can have control like the internet. We hope you like this episode. Do support by like, subscribe and share. Thank you.